In this video, traders, a quick guide of when to run winning trades, in my opinion. Stay tuned. Hey traders, well, welcome to you. Thanks for joining me. All right, so we try to run our winning trades. That's what we're told all the time. Run your winners, cut your losers. And yes, in theory, that's great. Want to be in our worst positions, just cut them as quick as we can. The best ones want to run on and make so much money. In practice, it's harder to do. So what I'm going to try and do here, guys, is try to give you my opinion on when to identify when to run winners, because I don't believe that every trade should be run as a winner. An example is, if you're in a range-bound environment, it's very kind of low volume, low range, nothing fueling the fire, then it doesn't make any sense to run your winners. You're just grabbing those little bits of profit and just kind of ticking over and just grabbing singles, grabbing doubles. You're not looking to hit it for six because the market isn't in the right environment. And this is the kind of crux of the matter with this, is that whatever you're trading, you need to be in the right environment to run the trade. You can't force and say, I've been told to run my winners, I've been told to run my winners, I should run winners, I'm going to work on that. And if the environment is not conducive to that, it's just never going to work, and you get frustrated, and then you're going to take those quick trades, and then when the market is in the right conditions, you're going to be frustrated at yourself for not running your winners. So there's definitely a time and a place for it, and a good way of doing this is to go back to your trading plan and say, right, I'm going to, under these conditions, I'm going to run my winners. Under these conditions, I'm not. So some of the conditions that I think are good for that are obviously in trending markets. So when you're trading with the trend, of course. So you're trading with a trend and you happen to have a trade on, then that's the time to go, yeah, I'm on the end of a pullback. I've caught a nice little pullback in the trend, or whatever that may be. I'm in here. Who knows where it goes? Let me ride it and let me see if I can run it, and let me either operate a scaling type strategy or some sort of trailing stop loss, like a moving average, or any of these other kind of trailing stops that we've talked about before, how to kind of operate on that level. But just a trending market, you don't know when the trend is going to end. And guys, trends almost always go much longer than you think. And so if you're on the end of a trend, say, thank you very much market, I'm going to now extract as much as I can out of this. It's hard to do sometimes when you're so used to grabbing your profits, but in trending markets, that's when you run your winners. You really try to extract as much as you can from it. Number two is after a breakout. So if the market is broken out of a key level and it has that momentum, it has that volume, there's a time to give it a shot. Now, not all breakouts work, and this is when you obviously got to manage your risk. But if you do have a situation where it's broken out of a key level finally, then see what you can get from it. Because if it does go, that breakouts not so likely to work all the time, but if they do go, they give you multiple risk-reward ratio type trades. So if you're already positioned in it and it's broken out, by all means scale some off into the break. I'm a big fan of that, but at the same time, let the trade mature for you. Number three is when you have a feasible long-term target. So this is when you do have a feasible long-term target. You're like, okay, I believe this market's going to go to here, and it's significantly higher, and it might take a few months, it might take a few weeks, it might take a few days, it might take a few hours if you're a really kind of short-term trader, but it's feasible, and you're holding it. Example would be if you are trading a very active kind of downtrend day, very long downtrend day, Dow's down for 500 points, and then something comes out that's super bullish on the market, some news, you get on the bottom of that and you're holding it, you're like, okay, well actually we could easily break the highs here because we have the fuel to the fire, we have a reversal pattern, we have a reason for it, it's a sensible long-term target from a kind of shorter time frame perspective. Another one could be, okay, you bought this stock and you believe it's going to go back to highs because earnings have been a catalyst. You get the idea. If you have a sensible long-term thesis, let it run. And if it makes sense to you before you took the trade, then you should try to extract that kind of idea out of the trade. Fourth, if there's a good catalyst. So what is a catalyst? It's something that is potentially changing the valuation of that market. It talks about interest rates, we talk about jobs numbers if we're talking about the indices or commodities or currency pairs, talk about earnings for stocks, any of these type of things. Something that's fundamentally repricing or making traders consider their valuation of the market at that moment in time significantly higher priced in their mind, or the economy is going to do significantly better than expected. Of course, that's going to boost anything that's kind of susceptible to the economy, a currency pair, the index, or the basket of stocks that are most related. Maybe it's the financial sector. or whatever it is. The point is, if there's a good catalyst, that will help you loads. And the fifth, help you loads to hold the trade. The fifth and final thing, guys, is momentum is very strong. So slightly different from trending. Trending environment is, I consider much more of a kind of, chugging along, and again, that's when you want to hold it. But if you've got real good momentum, something that's causing momentum, most of the time it comes off a catalyst. It could be, recently we've had with tech stocks, just lots of momentum coming because lots of people trading it. So that's when you're getting that really significant move in a very short period of time. Maybe it was doing this up till then now it's suddenly really ripping momentum. That's the time to sit on your hands, not get involved in it, and just don't know where it goes. But the caveat to that, guys, is to make sure that you've got to stop to lock it in, though, because these are, when it's got excessive momentum, when it's going to mean revert, the mean then comes back down here. So locking that in is sensible. Note that is different from the trend. The trend is more of a chugging, grinding. Hey, let me see where it goes, nice and steady. Does another bit per day, another bit. Momentum is like ripping, pulling back, ripping. Then you don't know how far it's going to go. If you've got a tight leash on it, it can go significantly further than you expect. Anyway, guys, those are 5 times and scenarios when I think it's wise to try to run your winning trades. Take care, whatever you're doing, keep that risk managed, guys. Bye-bye.